My name's Jamie. I am a software engineer in the finance space. I interned at Goldman Sachs. I've been in the business for about 15 years. I've been in IoT, I've been in private wealth management, and most recently I got into digital currencies. And Solidi is now my full-time work. Solidi is a digital currency startup in the Cambridge University incubator. Tonight I want to talk to you about Solidi, digital currencies and Forex. I'm also going to cover regulation and banking, and hopefully we'll do this all in 10 minutes. According to the World Bank, if you wanted to move $200, on average in 2015 it would have cost you 7.4%. And it was taken 3 days. Now, we have some new players in this market, but invariably they're using the same technologies as the incumbents they're aiming to replace, which means they have the same cost models. There are some even better players who do person-to-person, but the money that they're making in this market doesn't actually reflect a person-to-person transfer, and it's commonly believed that in most cases they're actually going back to Forex. Their margins are only 0.15%, which is fairly pitiful. So we have two problems. Traditionally, for small amounts, FX is really quite expensive, particularly remittance. And the person-to-person model, which we're championing as being the next best thing, doesn't really seem to work. So why doesn't the person-to-person model work? The reason it generally doesn't work is because there's no opposite counterparty there to actually do the trade with. You need to find someone doing exactly the same amount in exactly the same currency at broadly the same time. There's hybrid models where you bring in other currencies, and all that happens is it gets a lot more complicated and there's a greater risk of counterparty default. In Solidi's model, we bring in digital currencies. Because we have a digital currency order book, because we have the currencies on our system, we don't have a risk of counterparty default. We can work with any amount and any size. And this means that we have a much higher chance of doing a person-to-person match. But even if that doesn't work, rather than going back to the normal Forex markets, we have an alternative. But to explain why Forex is bad, I need to draw a little diagram. This is broadly, for small amounts, how Forex works. It's simplified for the normal presentations I do. I know we have a number of finance people in the audience here, so bear with me. Essentially, you have a huge number of steps to go through, and most of these steps you don't need. In the digital currency model, we can take out most of the middle of that and bring you to something like this. The sender goes to a remittance firm, such as Solidi. They then buy a digital currency, we move it to the target jurisdiction and sell it. But there's still a problem there. Digital currencies are quite expensive to do transactions in, and that's where Solidi has an advantage, is we're already a digital currency exchange in the UK. So we take out the first part of that diagram, and we're rolling out exchanges to other jurisdictions, so we can also take out the second part. And once you've done that, you have a marketplace where we can save about 90% of costs of Forex. And we can either pass that on to the consumer as a better rate, or we can keep that and invest in developing the technology further. So, in summary, what we do is person-to-person FX using digital currencies. If we can't do that on our own systems, we can then go out to the blockchain to move the money. And finally, if we still fail, we can then go back to Forex. The markets that we work in, so we're currently in the person-to-person market, so it's a 100 million market in the UK, and we're aiming to follow the first green arrow there and move into the international remittance market. But that is subject to banking regulations, which I'll come to in a second. If that fails, then we'll move, following the orange line, into a much more advanced FX platform. So that's what you would traditionally see traders using with graphs, charts, order book depth, multiple order types, etc. To get through this in 10 minutes, I'm going to skip this revenue slide. The important part in the example, though, is that once we finally move the money, our FX rate is 21.51 pounds to the rands to the pound. The interbank rate when I did this yesterday was 20.14, which is an uplift of 6%. So where are we? Solidi was started trading in November last year in test. We moved into beta in January. We've done 500,000 transactions and we're still not out of beta. Sorry, £500,000 of transactions and we're still in beta. We're kind of holding the door back at this point. The plan is to move into remittance in 2017, and to get there, we're rolling out exchanges in other jurisdictions such as South Africa. So, regulation. Bitcoin regulation is tough. It's particularly tough because we still haven't figured out whether it's a currency or an asset in the UK. According to HMRC, it is VAT exempt, but it's not a currency. And that is about as much as we've got. And that makes regulation really hard. I'll start with HMRC first because their regulation is quite simple. They say that if you move any money or any representation of money in any type, then you're a money services business. So it's fairly clear there, and Bitcoin businesses can register with HMRC as an MSB. The FCA is a lot more complicated. They don't currently recognize Bitcoin in any sense, and they also don't regulate exchanges. So depending on which lawyers you talk to, they'll either say that you need to become regulated under FSMA as a regulated investment exchange, recognized, or the most common one is they say that you have to fall under the PSRs or the e-money regulations. If you're really unlucky, then someone will tell you that you have to be a multilateral trade exchange. And finally, you could talk to the Prudential Regulatory Authority and try and become a bank. But that has a couple of problems in itself, one being cost, but the other is that in the UK, if you want to gain access to any of the payment networks, you need a sponsoring bank. And if you can't get a bank to give you a business bank account, it's very unlikely they're going to sponsor you to join Vocalink or the Faster Payments Network. However, the FCA have started up a regulatory sandbox. Solidi's just joined that. The sandbox is designed to give you a safe environment to test out your new business models. You can become partially regulated under this and test against real customers. And if what you're doing requires you to be fully regulated, then they're talking about bringing in umbrella companies that would carry the regulation and then let you use that on their behalf. They are talking about regulatory waivers for FSMA and also even changing regulations, but that can only happen if it's compatible with EU regulations, which has become rapidly more complicated in the last week. And then there's costs. For a startup, the costs are quite difficult to meet. Your legal costs are going to be 15,000 to 20,000. The sandbox should help reduce those, but it won't get rid of them. The other problem is that those costs don't guarantee you getting regulated. You can spend that money and then discover that the FCA turned around and reject your registration. The other problem is capital requirements. They start from zero for a small payment institution all the way up to €350,000 for an e-money institution, which is what they believe most Bitcoin businesses would become. And then even if you do actually manage to get regulated and you do have to manage to raise the capital to cover this cost, this doesn't guarantee you access to banking, which brings us to banking. Solidi is part of the unbanked. We have spoken to many banks. We've had meetings with their regional corporate teams. So those are the sort of teams that are dealing with businesses in the £2-3 million per annum turnover. They've been reasonably productive, but as soon as they pass this business on to their risk or compliance department, it's pretty much an immediate no. There are no reasons. The best we've had out of one bank is that it's competitively sensitive. They won't tell us. And we're not the only company that experienced this. The FCA commissioned a report by Howell & Co. into the AML de-risking that's going on in the industry. And they identified that there is basically whole-scale de-risking for entire segments of the industry. The payment services regulator pretty much came to the same conclusion. Which is odd because according to the National Risk Assessment, if you look at that bottom line there that's highlighted, digital currencies are a low risk of money laundering and financial terrorism. So it's a bit unclear why this is happening. And yes, from the report, banks were not offering facilities to conference companies and other companies servicing the industry but not directly involved, which gives you an idea of the fear that is in the banks about getting fined by the regulators, etc. So the banking options for these companies, you have the FCA sandbox. That's going to help, if only to reduce the cost of regulation. There's the FCA's report and the PSR's report, which should also hopefully help. We've got challenger banks, so Feeder, Atom Bank, and Mondo, or whatever they're going to be renamed to. They may be able to help us. And the last one is other UK jurisdictions, such as Jersey, could step into the mix. And that's me.
Do you have any questions?
Yeah, I'm Russ from Global Advisors. We run a Bitcoin hedge fund, so we're very sympathetic to the issues with banking in particular. So are you really targeting like the remittance market? So somebody like a Filipino maid working in Hong Kong trying to remit money back to family in the Philippines? Or are you talking about people that are trying to just buy currency, which didn't look like you really solved that problem?
So we're targeting both. The Filipino maid is particularly difficult to target purely because they're almost always dealing in cash, and that's something that you then need to have a network of agents to target. So primarily we'll be targeting people moving money, so the likes of students moving money, having money sent to them to pay for course fees and things like that. Or the opposite direction, professionals sending money back. The worked example we had there was for an IT professional sending pounds back into rands.
So the banked, not the unbanked?
At this stage, the banked. I'd like to go for the unbanked, but it's a very hard area to solve. And to be honest, Western Union's doing a pretty good job there already.
Yeah, for like 15%.
It's not actually. It's commonly said that the Western Union charge really high fees, but it's not as bad as you might think. And particularly things like the remittance route back to India, Western Union I think is now down at 1%. So they are doing a very good job on particular routes, but there is room for improvement. And actually, in most cases, the improvement's probably going to come in the company's bottom line rather than it is the rate that consumers get. The fact that companies like TransferWise are only making 0.15% on their transfers, that's a sort of a small mistake away from making substantial loss. We think that we can very much improve on that.
Jamie, we're going to probably come on to talk a little bit about this when I speak about regulation a bit later on, but the FCA sandbox interests me because it's something we've been kind of following. The last time I was over in the UK speaking on this, the sandbox application period had only just opened, which I think was just over a month ago now.
Yeah, that's right.
Have you guys been accepted into the sandbox then?
We are working with them. We haven't had a formal letter saying you're accepted, but we pass emails backwards and forwards, and we're going through regulations and asking questions. So that's as close to accepted as I think we're going to get.
It's looking positive then, which is good.
Yes.
Okay. No, that's really interesting. It's useful to see that they are following through with some of the initiatives that they talked more informally about in dealing in the digital currency sphere. So that's really good.
Yeah, no, they seem to be well behind it. Although I would say that in the digital currency space, it's very easy to become not eligible for the sandbox. It takes a bit of creative work.